Hello and thanks for tuning into the channel. This is the ASX and sectors weekly chart analysis for the week ending 23rd of December 2022. We're almost at the end of the year. The first chart is the S&P ASX 200 index, also known by its ticker code, the XJO. Now, this market traded lower this week, but it closed in the top half of the bar and just above this test for supply here. This market has been trading lower over the past 3 weeks, but it's reluctantly trading lower. It doesn't really want to. Here's the adjacent resistance. Supply is being drawn out from here. The market did intend to push higher up here. You can see on this increase in volume. However, overseas markets have been trading lower, and that's put a bit of pressure on this market. It's unable to trade independently. It would be too expensive and costly if things went wrong. So the market will always trade in parallel to some extent with the overseas markets, and probably the main reason why the market didn't accelerate higher. You can see supply was drawn out in the top half of this bar. The mid-bar close with a telltale sign. Price then pushed lower the next week. But look at this bar. Spread narrowed, volume increased. This was an attempt to support the market. And once again, this week, prices moved lower, but reluctantly. It's dipped lower, recovered, closed above mid-bar and above the highs of this test for supply previously. This market is well placed to recover some of these losses and push back up to the highs of the range, or even break out. But it will only do so if trading conditions remain favourable. If not, I expect the market will reluctantly move lower. Probably the next target would be this level where price accelerated up from the double bottom here. Here was the acceleration higher. There was a few weeks of consolidation before price pushed higher again, and this would be a logical level for price to move back to if the weakness overseas continues. But this week's bar does suggest that price would like to move higher if trading conditions remain favourable, and that would be a push up to this level. Now, overhead resistance is up here. This is your clear breakout level, up above 7,400. And you'll notice as we go on in the next chart, the mid-caps are already up at this level. This is your breakout into clean air level. And we'll see how the market goes. Valuations may be a little stretched at the moment, but the overall economy in Australia seems far better placed than some of the overseas economies. And you might likely see prices move sideways, perhaps between this level, just above 7,200, and this level, just above 6,800. And price can move within this range relatively comfortably without very many issues. We'll move on. This is the mid-cap sector. You can see there was no double bottom here. The XJO came right down to this level. And here was the acceleration higher and a few weeks of consolidation. This is where the breakout highs are into clear air on the XJO, where in this market there's another level just up here which will need to be exceeded. These two levels are almost adjacent on the XJO. You can see that price has attempted to hold on to the lows of the range in a similar fashion to the XJO, but price broke down this week but remained above the lower level. So this market's a little compressed compared to the XJO, which is a bit more stretched out, you might say. I'm not expecting this level to be exceeded in the near term. I think there's more likely that price will travel between these two ranges in a similar fashion that I pointed out on the XJO, depending on what happens overseas. You've certainly got strong support down here if required. At this point in time, given favourable trading conditions, I would expect price to move back up to this level and perhaps not exceeded in the near term. There was certainly an attempt to push higher here, but that wasn't supported by overseas markets, but that made a breakout challenging at the time, and this market pushed lower in response, attempted to hold on to the lows of the range, but with the market being so compressed, this is a stronger level in here, and prices move back down to it. Next chart is the small ordinaries, which have been trading a little weaker than the larger two indexes. Trading is very similar though. You can see this is where price accelerated higher. There was a few weeks of consolidation. Price pushed up. There's a little shelf just in there. Price pushed up above that shelf and appeared like it was going to break out. But same as the larger two indexes, prices moved back lower and is trading just above where price accelerated higher here. This is the level that the mid caps are currently challenging. That's the breakout level into clear air for the XJO. So you can see how much further price is down in this sector. But similar to the other two, there was an attempt to support the market this week. Price dipped lower, but then recovered back to mid-bar and pretty much held on to the low of the previous bar, which was encouraging. I'm not sure price can push right up to the highs of the range here, but it may trade, at least in the near term, up to this level, and you'll have price trading in a range like this, which is the most likely outcome. If this level was broken to the downside, you'll see this double bottom level come back into play. But we'll leave that for now. I think the Australian market is looking a little stronger than weaker, and sentiment still remains at least neutral and perhaps on the stronger side, but the overseas markets are dragging them down. And while they may go down in response, they may go down reluctantly at a reduced level compared to the overseas markets, if that's where we're going. Next chart is the financials. You can see the last three charts, price had been trading lower during this period here. For the last 2 weeks in the financials have traded sideways, both as fractional up bars. These were absorption bars, you might say. Prices moved lower here and has traded sideways, absorbing the supply, absorbing the weakness that's been drawn out in recent weeks. This market also didn't form a double bottom. It was too strong for that. Here was the acceleration higher. Now, on the other charts so far, you've seen these three bars all trade as consolidation. But in this market, price continued higher. There was a little period of consolidation there. Price continued higher again, and it's moved up to this level, which is pretty much adjacent to this. And here's the breakout level if you want to measure. This is where the XJO would break out into clean air, and it's currently where the mid caps are already challenging. So you can see where we are compared to the other sectors and to the parent index. Now, price is going to likely hold on above these levels. This market's a little bit stronger than the others. But if we're going sideways, which does seem like a high probability at this point in time, you may see price trading in this sort of range, at least in the near term. It would take really favourable trading conditions to break right out and push up to this level, which would put the market in clean air, similar to the XJO. If that was to happen, that means there's no trading to the immediate left. There's no supply to be drawn out to the left. The only supply that would be drawn out in a market like this would be profit taking from positions taken down lower, or for short positions which are coming in from above, is the way I like to picture it. Profit taking are positions bought lower and supply coming from new, fresh, short positions are coming from above. This market's likely to trade sideways, and if there is extraordinary strength or favourable trading conditions appear for whatever reason, a push up to this level would be more likely. This market is the strongest of the three we've looked at previously. Talking about stronger markets, I've been liking the look of the miners recently. You can see in here, this is worth noting just quickly, while we've got a bit of time over the holiday period. Price pushed down really strongly here, but only on average or slightly below average volume. This was likely engineered for whatever reason. Well, the reason is apparent as you go along. There was a response higher. If this was really true, serious weakness, the next bar wouldn't be up, or rarely would it be up. It would come down to this level before there's any sort of buying support come in, because this is where support came in previously. But price sort of hung in midair here, and then the next bar was up. And then there was no support for higher prices here. Look at the volume. No support for higher prices. But on the downside, there was no downside follow through on response. Volume increased to well above average. This was a buy the offer bar, no doubt about it. And then there was a shakeout in response. Now, this was accumulation. Their next bar was up, and you had two down bars on relatively low volume and average volume. A no demand bar, higher prices weren't favoured at the time. Another shakeout, sort of similar to like this one, and then price gaps higher. This was another period of accumulation. It was difficult to realise while it was initially taking place. It became way more apparent as time went on. You didn't need to know immediately that it was an accumulation, so long as you worked it out eventually or before it broke out. It was even more apparent in the gold chart, and these two are related. This is the miners, and gold miners are reflected as well. So price gaps out. This is the market showing intent. It pushes higher above this line. Here's the next level, which goes through there. That's where resistance was from the left, and you've got the higher level up there, and the market's currently absorbing its way through this at the moment. Now you can see price really accelerated high here after a couple of weeks of consolidation, absorption, but really the market wasn't strong enough to accelerate high here. This was probably the overall market playing a part as well, and price pulled back in response pretty much to that level. In fact, you could possibly draw it there anyway, which would mean it just held on. And this week was an absorption bar on relatively low volume. So this market is well placed to push higher again. It'll need favourable trading conditions. That doesn't mean it'll happen straight away, but there is support in this market, and this market will not want to go lower. If it was forced lower, this is the initial level you'd be looking at. But more than likely, it will trade sideways and absorb the weakness unless it was really overwhelming. It'll trade sideways, and then when favourable trading conditions arrive again, it'll attempt to push up to this level. And then we'll see from there, the next level higher is up there. Next chart is the ASX gold producers and miners. And you can see the accumulation I pointed out in the last chart much more easily here. Here's where price accelerated lower and there was a response higher. Now, this bar here looks really suspicious, very high volume. You would certainly expect, if this was all selling pressure, and at the time it looked really weak, that price would just continue lower. It was all over. That was the end. But that's not what happened. Next bar was sideways, shakeout, price moves higher in response. There was lots of buying in this bar, but it was hidden. You didn't know what was going on. But that formed the first half of this accumulation in here. And it was really difficult to know at the time. You really had to look at what didn't happen to understand that there was support in this market. But then over the next 2 weeks, price pushed lower. But for me, this bar here was the real telltale. Volume increased to above average, spread narrowed, next bar was up strongly on a little gap here. So once we got to there, I started putting all the pieces together. And if you look at my weekly analysis, it was about there I started pointing out that this was actually an accumulation phase. And then I realized the same thing was happening in the miners overall. It became really obvious. Then we had a test for supply and then a gap out in a similar fashion that the miners had. Price pushed higher, test for supply, and you can see volume was really high here. So this was buying absorption. It would have initially been a test for supply, but volume got very high. And a true test for supply should be a narrow spread down bar, closing mid to high on low volume. This was above average volume. But look at what happened. The next bar traded very slightly below the previous close, then accelerated higher. That then tells you this was buying. This was absorption. Price continued higher, and there's the breakdown line from the past. You probably see resistance up to that level, and then above that, we're somewhere in there like that. The market will need to absorb supply from what's drawn out at this level. Now, it won't be full of supply, because I imagine anyone who was holding in there at the time, there'd be a certain percentage that as price broke down, they sold out. They sold out on the breakdown here, and anyone else would have been under a lot of pressure down here. So I expect resistance will only be moderate within here, the supply drawn out, but there'll be some for sure. Some people will hold on. It's human nature to hold on. Some people will hold on for an extended period with the intention of getting out at break even when price one day comes back to them again. So there'll be people holding on in here, and they probably won't continue to hold. And that's part of the reason that gaps form like this towards the upside, at least. It's an encouragement for existing holders to keep holding with the promise of more profits to come. So the greed factor takes over. Oh, look, I was going to sell out at break even, but now I'm making a profit. I'll just hold on a bit longer. And that means that the professionals who are pushing the market aren't forced to absorb the supply that's drawn out when people like this sell out at break even. So you may find price either grinds sideways in an absorption pattern like this, which is a bullish absorption pattern, or price gaps up. Let's get rid of that. Or price gaps up and into this zone like this and accelerates higher like that and gets price through, and then there'll be a period of consolidation in response like that, just above the range. That's another way. The two ways that are most common to tackle resistance from the left. Okay, we're going on a bit here. Next chart is energy, which has been a real push me, pull you sort of chart to follow recently. It's been, well, I think I've been describing it as a lack of harmony in the sector. Some stocks are trying to go up, some stocks are going down. They're alternating their strength and weakness, and that's causing the market to really compress and go nowhere. I think the market is actually strong overall, or relatively strong, but it's not all working in unison at the moment. And for that reason, the chart is looking really awkward. It's looking really messy. Whenever price begins to break down, support comes in. You've got support like here, here, here. the reversal here. But the market can't get it all together and clearly break out, or at least it hasn't so far. This week was an attempt to push higher, very low volume for a holiday period, means there really wasn't much oomph or effort or force behind this week's buying. I'm not sure it's particularly weak. If volume is a bit higher than that, I might call it an absorption bar, but I think it was just a weak bar. Not weak as though it's going to break below the lows. It was just a nothing bar. Perhaps the market went on holidays this week prior to Christmas and New Year's, and we'll see something more substantial happen in the future. I would expect from a bar like that the initial response will be down. So you'll get a bar that perhaps looks like this earlier in the week, but then perhaps ends up more looking like that. And that would leave the market well placed for a bar like this in response. But we'll just see. At the moment, I don't see the market easily pushing below these lows. And if it did, this would be the level. Here's the next level. And here's the next level. So you've got a series of levels below the current lows of the range where price could push higher. Here's the level where I would expect price to be challenging these highs. So after a test for supply early in response, possibly not next week. Next week's only a 3-day trading week before the new year begins. So you may just get a test for supply next week, something like that. And then we'll see the true response the following week. But similar to the other markets, I won't be surprised if until this market gets itself organised, it's trading within this range sideways. I don't see a huge amount of weakness, but I can't see all the market in this sector trading in harmony together. At least it hasn't for a little while. And that little while has continued all the way through here. The market can't work together. It's giving all these overlapping, awkward-looking bars. It's very messy. Okay, next chart is healthcare. There's another messy chart. Looked like it was going to break out months and months ago, sort of back here. It looked like it was ready to go up here, but no, price pulled back, 2-bar reversal or shakeout there. Then price accelerated higher, looked like it was ready to break out again, couldn't do so. Weakness came in. Price eventually broke the lows of the range, moved back lower, went through a period of consolidation, broke out again here, got tangled up with the supply coming in from the left and the weakness in overseas markets, and here we are, still haven't broken out. Price is holding on to this old range here. There's the sideways range. This is perhaps the most likely response in the near term. A breakdown here would probably see this level come back into play. There's quite a bit of support within this range here, down below. I'm thinking this market is going to attempt to go sideways because I'm anticipating a bit more weakness in overseas markets. So there won't be so much encouragement for price to break out and move higher. But I don't think very much of the Australian market is particularly weak at the moment. And because of that, we may end up going sideways or reluctantly move lower. If we reluctantly move lower, this 40,000 level probably comes into play. If we continue to trade sideways, I expect the range is in here. And that's the most likely trading at the moment. Last chart is the industrials. This is another messy chart which appeared to be ready to break out up here, but price failed. You had a breakdown, but support came in almost immediately. price raced up to the highs of the range. There was 2 challenges and it failed. Price pulled back. Support came in again, down at these lows. Price accelerated up to this highs of the range, but price failed again and came all the way back. There was a period of consolidation and buying support come in down here, and price accelerated higher. Once again, pushed up to the highs of the range, failed, and now price is attempting to consolidate just in there, just below the range, similar to what it did there before there was a big breakdown, and similar to what it did in here before the big breakdown again. So whether that's telling you what's going to happen in the future, I'm not sure. It's a really big, broad, wide range between 6,000 and 6,600 on the sector index. We'll just have to see what happens. The rest of the market looked a bit stronger. The rest of the market closed much higher in the range like this. And this market has closed down near the lows of the range and only just held on to the previous, or the 2-bar low. So it's perhaps a little weaker than the overall market. But if the overall market continues to push up to the highs of the range, I expect this market will be dragged along with it. Whether it likes to or not, there just won't be so much support in this market. And that means the market probably wouldn't be looking to break out. It would be looking to move up to the highs of the range reluctantly and then probably trade sideways like we've been saying. If there really is some serious weakness emerge and price breaks down, this is the logical level, the high of this bar where this little consolidation period came in. That's where I'd be looking price to move down to initially. And if required, you've probably got support down through in here as well. That'd be last gasp support. A breakthrough that would be really a serious and significant event. But I'm not expecting that's going to happen. I'm expecting price to trade sideways and try to hold on, and at worst, come back to this level here. I'll just put it in red so you can see it better. I think that's more likely the outcome. Trading within this range, and if weakness continues to come in, a push down to that level with price moving reluctantly lower. And just quickly, here's the parent index again, the one most people are watching, so you really need to understand this chart. This chart can be a little messy. There are a small number of extremely large cap stocks in this index, and that often means that price overshoots to levels a little more than you might expect. You just have to go with it and understand that that's the character in this index. Understand that slight overshoots happen, and that happens because we've got 4 big banks, we've got 2 big miners, and a few other stocks that have market caps that are really much larger than all the other stocks that comprise the ASX 200. And if those 8 or 10 stocks continue high when the market starts to roll over, or vice versa, you get overshoots to the upside and to the downside. You just need to go with it and understand that's the character, that's the personality of this index, and understand it, work with it, and it's actually okay to read after that. Sometimes you think it's all getting very messy, but it's not actually. It's because of the way this market's constructed. And perhaps sometimes the 25 leaders is a better market to follow if you're looking at the larger caps, and mid caps is a better indication of the overall broader Australian market if that's what you're looking for. But just understand what you're reading and it all comes together. I'm expecting some sort of response higher from this bar. Now, we've got a 3-day week next week, which makes it a little awkward. If overseas markets continue to trade poorly, you may get a secondary test, something like this. if overseas markets are trading more buoyant, you may get a push up to the highs of this range. I don't see the highs of this range being exceeded very easily. Valuations are looking a little stretched at the moment, and that'll make the overall market a bit reluctant to completely break out. So most likely outcome is a sideways action, and if price does move lower, I expect it to reluctantly move lower down to this level. Okay, that's my lot. It was a bit longer than normal, but we've got a 4-day weekend effectively coming up now, so you get a bit more time to watch the video and understand what I was on about. Thanks for your time. Enjoy the holidays, and I'll be back next week for the end of year charts. Thank you. See ya.